Let's take a look at some charts from Dash from last week's article in Brave New Coin. So Dash is considered a privacy coin by some, a soft privacy coin by others, and not a privacy coin by many people. It is an optional privacy coin. It does not have privacy by default like Monero or Grin. So you can see the active addresses on Dash. You can see the daily transaction volume. Now this is for the unmixed or unprivatized portion of the transactions. So these stats don't necessarily reflect all of the transactions. Dash is second in market cap, almost second in every other metric except daily active addresses and transactions per day. I think with the coin mixing here that's going on, it's really helping boost this metric. So it's almost unfair to compare Dash to Monero, for example. I think Dash and Monero have similar mixing on the chain. It's just you can see Dash's mixing. You cannot see Monero's mixing. So again, whether or not you want to consider Dash a privacy coin, that's up to you. GitHub commits, it's kind of in the middle of the pack, but there's definitely work being done, dev work being done. Dash has a treasury, so there's going to be work on Dash for the foreseeable future, just because it's continually being funded. Looking at Dash's issuance rate, inflation's down to around 6%. They recently had their issuance reduction. This is their 4th time now. So 6% is still a little bit high. Bitcoin's around 2% compared to many other coins that have been around this long. But it's definitely lower on the lower end when you compare it to like Zcash or Grin, other privacy type coins. It's definitely higher than Monero. Looking at Dash's hash rate, you can see it's almost at a new all-time high. And I don't know why this is, because there aren't any new ASICs coming online. So there might be an ASIC coming that isn't public yet. That would be my guess. That's sort of pushed out of this plateau here, and all of a sudden we get boosted up in May 2020, almost on the dot. So that'd be my guess. Now, I don't see it here in this list. This is hard to read, but I don't see it in this list here. November 2019, I think, was the last new ASIC that came online. But it's very possible that Bitmain has something coming, or Bicol, or one of these guys. I don't know. In general, most of these ASICs, the new ones anyway, are in profit at 4 cents per kilowatt hour for the X11 algo. So I think from a mining perspective, Dash is doing just fine. Now, Dash is unique in that it has a proof of work, proof of stake system. So not all of the consensus, or not all of the transactions, are confirmed with proof of work. It's sort of a hybrid system. If we look at the Masternodes, this actually isn't an up-to-date list. The website I used for this wasn't working, so just a heads up on that. But in general, these Masternodes have plateaued since January 2018 almost. They sort of went up and then went down. So you need 10,000 Dash to start a Masternode. And some people even argue with me that this isn't proof of stake. It's proof of something, proof of provenance. I don't know what the term people are using. It doesn't matter. I don't care. Most people think of it as proof of stake, even though it's not exactly proof of stake. It's similar enough that it's easier to just lump it into that bucket than to explain the nuance. Same thing with describing Dash as privacy, or privacy transactions, private transactions. There's nuance there. You have to opt into it, yada, 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 but it's still available. That doesn't make me bullish on the coin because it has optional privacy personally, but it's there if you want to use it. So if this were bullish, I'd want to see Masternodes continue to increase, because that's just sucking up supply, 10,000 a pop, and that hasn't been the case. So it's no surprise that price has kind of been sideways, because Masternodes haven't been absorbing the supply. If you look at private transactions per day, this is only a few. It's 100, ish. Definitely all-time high level. So it's next to nothing in general. Similar to Zcash, where the optional privacy stuff, most people just either don't care, don't know about it, don't know how to use it. It's disabled on the exchange side. A whole bunch of reasons why optional privacy is just bad. It's easier to track. The pool, the shielded pool or the privacy pool, is smaller. So it's all things to consider when you look at Dash as a privacy coin, when in reality it's there's only 100 transactions per day being sent that are private sends. If you look at the mixing transactions, you can see those are also at an all-time high. I can't exactly describe the difference between a private send and a mixing transaction. I'd assume a mixing transaction obscures the data a little bit, whereas a private send obscures it completely, or attempts to anyway. Now Dash has a governance system where users can make proposals and then those proposals can get voted on, and then funds can be allocated to those proposals through the treasury. So, regardless of what any of this is, it's doing what it's supposed to be doing, and that it's funding proposals and people are getting paid for their ideas or for this marketing stuff, however you want to look at it. If we look at transactions per day and average transaction values in the fill here, in general, transactions per day have certainly been on an uptrend since mid-2018. Nothing to write home to Ma about as far as acceleration or speed or growth or anything like that. It's definitely going in the right direction in that it's going up and not down. Up and to the right is the name of the game. That's what you want to see. Average transaction values has essentially been flat, somewhere around like $500 basically since early 2019. Not bullish or bearish, just something to pay attention to. In general, if price goes up, average transaction values will increase. More people will be sending coins to the exchange to sell. All the sends in general get bigger just by nature of price. Looking at NVT, which is an inverse metric of economic utility, and daily active addresses in the fill here. Monthly active addresses actually. So monthly active addresses are just ranging at an all-time high. That's bullish. NVT basically near the historic bottom half. Now you want to see NVT drop low like this. Any of these spikes down, those are generally buying opportunities, which means that on-chain utility or activity is not being priced into the market cap. So currently, I don't know how to read this personally, but it's basically the middle. So neither bullish nor bearish. I'd say it's neutral. But to see daily active addresses, definitely more bullish than bearish as far as an activity level is concerned. If we look at MVRV, which is another measure of market cap and realized cap, or how much is moving on the chain at any given time. So MVRV is the fill here, and the line is the price. So in general, what you want to see looking at this metric is a high in price and a high in MVRV, or a low in price and a low in MVRV. So these lows would suggest buying opportunities historically. Even still, we're in a historic low period for MVRV, which says, again, there's lots of upside. It hasn't gotten to overbought territory yet. You can see these peaks have all corresponded to all-time highs in price or local highs in price, even here. So a lot of chains are different. It's hard to know exactly what these metrics are telling you, like NVT and MVRV, because if you base this off of Bitcoin, which is specifically one thing with proof of work only, no coin mixing, etc., 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 and then you port that over to coins like Dash, where it has a hybrid proof of work, proof of stake, it has coin mixing, it has all this other stuff going on, it might be hard to really take this seriously, because this looks really bullish in a vacuum. But time will tell, obviously. I'm not convinced that this, the bar for the low bar may need to be moved down over time, depending on the chain conditions or depending on what the chain is being used for. So my guess is anything below 2 or 1 would be the buying opportunity now. And the high bar would also move down to, between 2 and 3 instead of 3 and 4, for instance. This is Google Trends. I look at this for everything I can regarding any crypto. And it's basically an all-time low or near all-time lows. This is cruising at zero here. Not exactly cruising at zero anymore, but it's close. So in general, this just says no one's really Googling anything about Dash or looking up information about Dash. In general, any rises in Google Trends correspond with rises in price. So it makes sense that price is kind of stagnated since, mid 2018. Looking at technicals, we have VPVR, yearly pivots, 50 and 200 EMA, and RSI here. So in a vacuum, the 50 and the 200 look like they're about to cross bullish, which is usually a sign for future momentum to the upside. It's also at this yearly pivot. It's also at this VPVR congestion zone. So if it can get above the yearly or the psychological resistance level of $100, 100 buckaroos, it has a good shot of pushing to 175, 200, this pivot, this local high, but there's a lot of congestion here. And going from 2 digits to 3 digits is a massive psychological shift. Nothing really to talk about in RSI here. You could probably argue an Adam Eve or some sort of W thing to fit the narrative of bullishness even further. But really, it's got to get above this $8,500 level for me to get interested in it. In general, since early 2018, it's just been below the 200 EMA for most of its life. So it may have finally had an equilibrium in that the sellers are done selling and the buyers have a chance to take over here. Looking at the cloud, it's not above the cloud yet, which would be bullish territory. It's not below the cloud, which would be bearish territory. So I always call inside the cloud being neutral. And there's no, edge-to-edge opportunity like there was in 2019, even early 2020, where it just shot right through it in like 2 days. None of that really is here anymore. So what you'd be looking at is a long entry above the cloud, somewhere around 85, 90, something like that, with the other cloud signals. But in general, it does look pretty good, especially if it follows the rest of the market to the upside. My guess is it'll be a laggard in that it's not going to lead any rallies and it won't outperform most everything. But this should flip bullish over the next few weeks.